And good morning, everybody out there in real estate land. My name's Patrick Butler, and I want to welcome everybody to episode number 46 of the 5 year real estate career. Sorry, guys, I lost my track there. Episode number 46 of the 5 year real estate career. We're super excited to have everybody on board today. But as always, we want to start off with the right mindset because mindset is everything. And so I want you to take a moment and imagine, if you will, having a real estate career, whether you're brand new to the business or experienced, that in 5 years, they could be 5 short years or 5 long years, depending upon how you go about doing them, that will pay you abundantly for the rest of your life. Pay you abundantly for the rest of your life, enabling you to do whatever it is that you want to do. For us old farts on this call, that's to continue working in this business because there's so many things yet to accomplish, or to transition into a life of retirement. We'll get there at some point. But basically, ladies and gentlemen, 5 years to freedom all starts with one thing. Guys, what is that one thing?
Leads, my friend,
Lead.
leads.
Starts with lead. So we would encourage you to visit us at our website, the5yearcareer.com, and on our YouTube channel at 5 Year Career to learn more about all this stuff and to see our other podcasts. In the next 30 minutes today, though, we're going to talk about 9 steps, just 9, to real estate wealth, a modern approach to financial freedom for realtors. And you may have guessed what that is. It's creating passive income through real estate investment, one of our key points. And I've been talking a while. Eric, would you mind covering the engaging statements for our team? Because you're the guy that's really our investor professional here.
Well, thank you. You tossed it right into my wheelhouse. And did you know that the average renter spends 30% of their income on housing, leaving little for savings or investments? If you think about this, and by the way, very famous quote, right? J. Paul Getty said, I would rather have 1% of the efforts of 100 people than to have 100% of my own. And when I saw this striking statistic, the average renter spends 30%. I'm not getting 1% of the rent efforts of a renter. I'm getting 30%. And you want to talk about being able to scale and do the things that you said to get the direct, indirect, and passive income. And do you know that homeowners are 44 times wealthier than renters? And that's just on average. The ends are even worse, right? Lower for the renters. And that's thanks to equity and appreciation, something that comes uniquely with real estate. And speaking about real estate investments, they have consistently outperformed the stock market over the past 50 years. So just those alone ought to set the stage for what we're going to talk about today. And after all, isn't that what we want?
That sure is. So as we go into our content for today, success leaves clues, right? As you do things, there are little telltale signs that you should be repeating. And failure is often just the result of a lack of direction. In fact, I can tell you that 100%. I just came out of a meeting today with a team, and having unclear procedures, unclear goals is a recipe for disaster. Today, we're going to break down these 9 steps to real estate wealth, and it's going to be a practical roadmap to help you achieve your financial goals. Not a deep dive, because there's all kinds of neat stuff, and we'll probably touch on a few of them, but a high-level overview. So Mr. Skip Wiley, Skip is a consummate professional, proud owner of several large real estate and mortgage companies that has now since transitioned out of into a life of semi-retirement. Skip, what's the first thing that we should do if we want to really, truly be successful and achieve our financial wealth?
Patrick, over my long career, over 40 years in both real estate and mortgage banking, I've discovered that the key word that is even more important than defining your goals is the big why. Why do I even want to set a goal? And I'm going to go back, a short story. 21-year-old working at J.C. Penney's, 4 pennies. I had one goal in life: get free, get rid of my boss. I didn't care how I did it. And I happened into real estate, and I had no defined goals, no written goals. And that worked for me for the first 6 months of my career. But here's what happened. When I started building my first company, I realized that if I didn't have a defined way of tracking my success in that business, I had no long-term ability to operate a successful business. So today, we're talking about buying real estate. We're talking about somebody in the 5-year career buying 5 properties over the next 5 years. And here's the best way to do it. there's an acronym. It's called SMART goals. And SMART goals have been used in businesses, been used by individuals to create wealth for forever in a day. SMART goals are simple and easy to understand. First, they must be specific, very specific. Let's say that you have a goal to buy 5 pieces of real estate in the next 5 years. Well, guess what? Number one is be very specific, 1 a year. The second thing is, and also vitally important in my notes here with the SMART goals, is they must be very, very, very measurable. What are you doing on a daily basis to find that piece of real estate? The third thing is they must be attainable. Is it realistic that somebody who gets into the real estate industry actually can buy 1 piece of real estate a year? You're going to learn from the master in a minute, Eric, who is probably the most knowledgeable person I know to help you with that goal. And finally, it must be realistic, and you must set a time frame. If I'm setting a goal for buying investment real estate in Pensacola, Florida, my goal is simple. I'm going to post it on a board in front of me. I want to buy 1 piece of real estate in Pensacola, Florida over the next 12 months. And these are the action steps that I must take in order to achieve that goal. Back to you.
Right on. And when you set those goals and you put them down very specifically, they go into our subconscious mind. It's called the reticular activating system. And those goals, if you set up very specifically what it is that you're actually looking for, it'll come out of nowhere. As you're driving down the road, that property will pop up and you never would have thought about it before. It may not be for sale. It may be a little overgrown or something, but we'll get to that in a moment. So Mr. Wilner, the automatic landlord, he is the epitome of investor 101, 102, and beyond. Eric, talk to us a little bit about some of the things that you need to set up right after you set your goals, please.
Yeah, and just emphasize that setting the goals. People tend to skip over that, and it's a big mistake. And not taking that time out. It's like laying the foundation. Once you've done that, now what you have to do is you want to assess your finances. Take an honest look at your current financial situation. There's no point. It is what it is. Give yourself some grace. But use some tools, like there's great budgeting apps and financial calculators to evaluate your income. So it could be anything from an Excel spreadsheet. Hey, even if you do it on pencil and paper, as long as you do it and you find out and be readily aware. And when you're talking to other financing sources, other investors, lenders, when they have a sense that you have a good sense and assess your finances, things move forward positively. If they think that you don't even know your own finances, I don't think they want to deal anything giving you their finances. But we want to evaluate, what is your current income? It is what it is. What are your current expenses? It is what it is. And there's room to make some adjustments. Maybe once you write it down, you're going to even see some things that may cause you to make some adjustments. Let's talk about debt. Very important. I always say the debt is the middleman between you and financial freedom. So we want to address and understand the debt, the savings. What do we have left? What are we able to invest? And so knowing your financial health is the foundation. So you layer first your goals and your whys, like Skip talked about. Then you assess what your finances are. Now you're ready to go to battle. And what most people think going to battle is, and by the way, when it comes to real estate, there's that old saying, what comes first, the chicken or the egg, right? What comes first, the home or the loan? And let me just tell you, it's the loan, okay? Get pre-approved. That's step number 3. Get pre-approved for a mortgage, unless you're buying cash. But most people find themselves needing to get a mortgage, and the pre-approval is your green light for serious home buying. And so whether it's for you as you embark on the 5-year career, whether it's for your clients, you want to take them through exactly these same steps. What is it they want to buy? Why do they want to buy it? Because that lets you understand your client. Assess your finances, assess their finances, get pre-approved for a mortgage. It helps you to understand the borrower, the borrowing power, establishes the credibility with sellers, and it speeds up the buying process. Connect with a trusted, seasoned mortgage broker or lender, however you want to do it, but make sure that you start building your team also on solid footing. Back to you guys.
Right on. And it's funny. When I first got in the real estate business about 40 years ago, I was introduced to an investor and worked with him, kind of shadowed him a little bit, driving neighborhoods. And he was a former plumber. And he said he had maxed out his trading time for money as a plumber, and he got into real estate investment, and he did quite well. And he shared a very interesting tidbit of information with me, and I'll transition on this one. He says, so many people worry about having the money to make their investments. He goes, when do you need the money? And he said, it's the last thing you need. That's the last thing you do when buying a piece of real estate. You give the money. Everything else comes up front. He goes, I promise you, Pat, he said, if you find a house that you can buy and flip, let's say, and make 50 grand, somebody out there will give you the money. Whether it's a hard money lender or you find an investor, maybe through your sphere of influence, when we talk to our friends and family, hey man, I'm looking to buy an investment property this year. If you know of anybody thinking of selling, especially if they're looking at getting rid of something quick, I'm your guy. By the way, that'll tee up listing opportunities as well as investment opportunities. So conducting local market research, and local meaning where it is that you want to buy. You may want to buy in another state if you think that that's where your investment opportunity is. No matter what, though, build your team and start doing research. What are the best opportunities, generally speaking, for you to buy? Is it the luxury market? Is it first-time homes? Is it condos, townhomes? Figure that out. And then once again, put the word out as to what it is that you're looking to accomplish. If you're in your local market, even more important, because you're going to be driving around and you'll be able to put eyes on these properties. But with Google Street Views and Zillow and all these other things, there's a lot of pre-work that you can do on your potential investment. So it's really vital to conduct market research. Now, what's interesting is this is step 4 in the process. It's not the first thing you do, although it's never bad to go learn about real estate, but get your ducks in a row. So don't let money be an issue. As Eric mentioned, we can go through traditional or completely non-traditional, but get to know your local market. Speaking of teams, Skip, talk to us a little bit about that.
Hey, the only successful business that you can ever build is built around having the right group of people, a good, solid team. As an independent real estate agent, just one guy who gets into the real estate industry, pretty quickly you realize that you need partners who are going to help you get to the next level in your career. And I'm going to give you a list of partners that every real estate agent should create to have a successful history in real estate. Number one, you need a mortgage broker. You need a lender. 2, you need a financial planner. You need an attorney somewhere in the background because problems come up in real estate. You need a title agent. You need inspectors. You need a CPA and a tax guy. You need a contractor and even a handyman. You need an insurance agent. You need a property manager. If you're going to buy investment real estate, you may want to buy it, fix it, but you don't want the hassle of managing it every month. So you need a property manager and more. But here's the reason why you want these people. These people are going to answer those questions, provide a higher level of service for the clients that you want to help. And of course, you want to vet these people. You want to communicate clearly that we are a team and we're working together to help people buy investment real estate. And you want to foster win-win partnerships. Look, if I'm going to give a bunch of business to a title company, what am I going to expect from that title company? That they help me create more business. And you want to continually improve your team. You want to replace team members who aren't partnering the way that they should with you. But a team is the difference. And then just to add one more comment about the team, initially, everybody who gets into real estate is an independent agent that creates a small team. But as you add to that, when you get to the next level to build your own business inside the company you work for, building a large, successful team, you want to have all these people in place to service that team. Because without a team, you have a very slim chance of having great success in real estate.
Amen. Now, what's kind of interesting is we're talking about buying investment property for yourself. That same piece of advice about building a team, if I'm not mistaken, gentlemen, comes up when we talk about first-time homebuyer programs or doing webinars or doing affinity marketing. So that team component is essential no matter which piece of the pie or all of the pieces of the pie you choose to go down. So vital to have the right members of the team. And we talked about property management in that. Eric, you are the automatic landlord. Do you have a vehicle for property management? And then talk to us a little bit about actually bidding on some of these properties.
Yeah, well, and that's the thing, they say that if you do anything twice, create a system. And that takes a lot of the guesswork out. It takes a lot of, the uncertainty out. So, there's a lot to be said about that automatic. And now that we've gotten to the point, where we set our goals, we assessed our financial situation, we got ourselves pre-approved. So really, we have everything that we need in order to step forward and start making offers. And you want to make smart offers. Now, we could do an entire podcast just on this topic right here. Making an offer is both an art and a science. And there's mindset that's involved, there's positioning. But here's the thing, that's why you want a very agent with a lot of experience in this area, because he's got to understand the market, right? Because the price isn't in a vacuum. The price is a function of the market. In an up market, a down market, a buyer's market, a seller's market. And so you want to be able to craft, if you want to stand out and beat your competition, you want to craft competitive bids while staying within your budget. And how do you know what your budget is? Well, because you did the previous steps. Now you're set up and on solid ground. You know exactly how far I can go. You see, a lot of people get caught up when they don't do those first 4 steps. They get involved and emotionally involved. And the next thing you know, they overextend themselves. You won't do that. And you won't do that to your clients when you follow these steps. So remember, patience and strategy often win the deal.
So awesome advice. And as we're going through this initially, I said to the guys, these are pretty almost obvious high level steps. We're not getting into the nitty gritty about maybe finding distressed assets or whatever topic for another webinar. But part of Skip's goal, which is funny, Eric, you said, don't skip the goals, and we had Skip cover the goals. Is that ironic? But is to be able to track. So here's a good thing. If you didn't buy a piece of real estate in the next 12 months, look backwards. Did you make any offers? Well, no. Well, that's why you didn't buy any. You didn't make any offers. Well, why didn't you make any offers? Well, I didn't find any properties. Well, why not? Well, I didn't know what I was looking for. All of these things are vital to have in your mindset. So now we've made some smart offers. By the way, don't worry if they don't get accepted. You can't buy them all. Make 50 offers a year. That's okay. It's just the one that you need to get at the right price and terms that you're looking for. So now we've got to close the darn thing. So it becomes either our property, a property of our partnership, or maybe even a flip deal to get more capital to buy more properties that we actually keep long term. Skip, tell us about this closing process.
Yeah,
Hey,
I think that one of the biggest. Go ahead, Eric.
I was going to say, just before you get into that, because this is so important, but keep this in mind. Patrick made a comment that, not every offer gets accepted. And that's easy for people to say, but people get, again, emotionally wrapped up when they don't. Here's one of the things that makes me really puts me more at ease. Do you know that in baseball, right, most of the time you strike out? And that's why athletes tend to do very well. Not only are they competitive, but they're used to striking out. You know that an all-star player has a 300 batting average, which means that he strikes out 7 out of 10 times, but all it takes is one deal, right? Especially in real estate, one good deal, you can afford to strike out 7 times. And that's why you're going to keep going to bat every time, is because that profits. So back to you, Skip. Now go ahead. Let's close the deal.
Well, that's the part that I really want to stress, because a lot of times people watch our podcast, you're brand new to the industry, you're brand new to buying investment real estate, and you get the contract signed and you think you're done. Well, that's the beginning of the process. So one of the best pieces of advice I got early in life is understand the timeline, the parts of the transaction that have to be managed after the contract is signed. You worked really hard to get the contract, but you don't want to lose it by not fulfilling the commitments that are in the sales contract. So you should have a checklist, something that manages the process completely. And that checklist is going to incorporate monitoring the inspection period. When do you have to do it? Do you have a way to get out of that contract if the inspection comes back terrible? You also want to manage the appraisal process. You have a timeline for getting that done. And there are pieces of this transaction that have to be managed. And many good pieces of real estate investment, many buyers who buy their first home lose the transaction after they have signed the contract because they don't get good coaching. They don't meet timeline requirements. The other thing that I think is critically important, especially since we're talking about investment real estate, which most people don't buy their first property as an investment, is you got to keep communication flowing. Be the person who addresses an issue quickly and efficiently with that first time real estate investor. Be proactive, give them updates, get rid of the anxiety before it appears simply by being front forward, quick and efficient with providing information. Also, plan for the worst. Things happen. When you buy investment real estate, Eric, the things go wrong sometimes during the process.
Hey, Mr. Murphy is alive and well. Murphy's Law always shows up.
Yeah, so have some backup plans. And finally, once you complete this transaction and you've used a good checklist and you've walked through all of the parts of the transaction that most first-time investors don't do very well, it's time to celebrate. That's when you go to the closing. You make sure everybody is informed in advance. It's the same as a residential transaction. Keeping everybody informed through the entire process is critically important, and it makes it much easier, especially if you're dealing with a first-time investor.
Right. So step number 8, leveraging our investment. How does that help us, Eric?
That's the magic. Okay. And that's, one of the reasons why I fell in love with this real estate business. You see, owning a property is just the beginning, right? Everything else was the setup and closing what Skip said. Notice he didn't say that's it. Now we want to take that initial property. We want to use the equity, okay, to help us to build not only our own personal wealth, but use the equity to invest in more properties. And that's why we're able to accelerate into a 5-year career. When we invest in more properties, when we generate rental income, now we have additional funds to fund other ventures, whether it be the in or outside of real estate. Now, we're preaching to the choir here, and we know that we love real estate, but real estate really is a powerful tool from scalability to leverage that. And that's why, step number 8, once you build that foundation and set your first property in place, now we're actually going to another level where we can leverage that investment into more and more, depending on what your goals are. So back to you, Patrick.
Absolutely. Yep. Amen to that. Now, the last step, number 9, is really ties everything back to the first step again. And that's attend workshops, get educated, join groups. If you're eager to invest in real estate for yourself or simply want to work with other investors and learn the mindset, that's what you're going to need to do. Education is key to everything. We like to educate on these Friday morning video podcasts because we learn every time we teach, and we also hope to share that information with our audience. But workshops are really vital in our business under the 5-year career. In fact, what I'd like to recommend, oh, by the way, we do first-time homebuyer webinars, but investor webinars are coming soon. So stay tuned, everybody. We've got those, and we'll have a done-for-you program on that as well. But we just did a homebuyer webinar last Tuesday, so a couple days ago, 3 days ago, and had some pretty interesting results. Skip, I think you were the host of this particular one. Tell us a little bit about the numbers, the results that we had.
It's pretty amazing. You hear all this negative publicity about people not wanting to buy. Well, we ran a Facebook ad, spent a couple $100, not a lot of money. We were able to put 40 people who registered for a webinar. Half of them attended the webinar. Now, here's what's really exciting. These are people that wanted to learn how to buy their first home. And the series is called How to Avoid Mistakes. First-time home buyers are very nervous. So we educate them through this 45-minute webinar, questions and answers. It takes an hour. And we will continue to do that because of the success that we're having with educating the consumer. See, our job as realtors and as mortgage professionals are not to sell, but to educate. And the best way to educate a consumer, and we do these every 2 weeks now, first-time home buyer, real estate investors, we run webinars, do it for you webinars to help create massive leads that are convertible in a 30, 60, 90, 12-month period of time with people that trust us because they received an education from us, Patrick. And I can't, I get more excited about talking about webinars than any other part. But going back to one point that I think is critically important, that webinar program works even better if you build a large team of people that help you fill that webinar with clients that they have and they work within their respective businesses.
Amen to that. And one of our calls to action today, folks, is register for our next homebuyer webinar. And imagine, if you will, that it's either an investor webinar, but this one will be a first-time homebuyer program. That QR code that you'll see on your screen, just take a snapshot of that. Or if you want to reach out to us directly, come to our website at 5yearcareer.com. You can click a 30-minute discovery call with us. Go ahead and ask for some more information, fill out a form. We won't blow you up with offerings because we're just here to help and be your partner. So in today's podcast, we talked about the third level of the which is generating passive income through assets. There's many ways to do that, whether it's building our team, but buying real estate is one of them. I really want to thank our two experts, Skip Wiley and Eric Wilner, for providing their great insight. Thanks for letting me be a part of your team as always. We hope you've enjoyed what you've seen today, and we hope you continue to follow us. Again, go to our YouTube channel right there at 5 Year Career and subscribe to it. You'll be able to see all of our videos, all of our video podcasts that we've done, the inception, and we're now on podcast number 46. Stay tuned for more content. And remember, don't just listen to this stuff. The simple tools that we gave you today, if you want to own some more real estate outside of the home that you're currently living in, and if you don't own a home, that should be your first piece of investment real estate, is one that you're going to live in. Do that. Visit us at 5 Year Career YouTube channel. Remember, 5 years to financial freedom starts with things. Gentlemen, what is that? All right. So without any further ado, take care, everybody, and happy listening.